The crypto market is getting crushed. Fear and panic is setting in, and a certain crypto has even broke under the pressure. Terra's decentralized stablecoin UST is turning out not to be so stable after all, and it's sending the price of Luna off a cliff. Now, for all the people who have been investing in crypto for the last few years, then they're actually used to this kind of turmoil. But for anyone who's just started investing in crypto over the past year, then this can be a scary time. And so in this video, I'm going to show you why it's in the deepest crashes that the biggest opportunities are given to us. And though it may be counterintuitive, it is where the big money is made. And so we'll be looking at, first up, the market cycles, the pattern that keeps repeating again and again, and why it's incredibly important to understand this. Then on to the big opportunity, and why crashes are not always something to be feared. And then we'll finish up looking at where we are right now, why I think we've probably got further to fall, and how I plan on navigating this storm. As always, if you do enjoy anything in the video, then drop a like. Always appreciated. Okay, first up, we have to understand and constantly remind ourselves that because of human nature, markets are cyclical, and they're constantly going from overvalued to undervalued to overvalued to undervalued. Okay, got some great stuff to show you guys, so let's do this. And so this is the starting point when it comes to market cycles. And this was taken from Ray Dalio's Economic Machine, and it basically shows that markets are cyclical. Now, this line through the middle could be anything that we're measuring. He was showing the US economy, so this could be the S&P 500, and generally something of value as we get more productive will be growing over time. And this is what all investors are trying to figure out. It's the actual value of the asset, not the price. Now, because of human nature, this line is the price, and it's constantly going from overvalued to undervalued to overvalued to undervalued as everybody's trying to figure out what the actual value is. Now, what's amazing is that you want to burn this image into your brain, because this doesn't just happen with investing. I actually see this same pattern everywhere. Now, grant me a small digression, as I think it's really important. This pattern could even be, if this was time, then this could be the seasons where we have the summers and we have the winters, the summers and the winters. This could be day followed by night, by day followed by night. This could even be our bodies. So you might notice that as summer comes and you're doing a bit more exercise and eating a bit more healthy and everything's going really, really good, then we get towards the end of the year, December kicks in, we begin to relax. We might then take our holidays, we start eating some more mince pies and pecan pies and drinking alcohol, and all of a sudden we start putting on a bit of weight until we get to the point where it's like, okay, enough's enough, I have to stop drinking. Everybody joins back at the gym, everyone starts working out, and then the pattern repeats. You look really good until you feel very comfortable and actually you're looking pretty good, and then it goes down again. This could even be relationships or marriage, where you might get with someone new and you have your honeymoon period and everything's going great. A few months pass until you get a bit too comfortable, you have your first argument, and then it turns into a full-blown argument, which could last a couple of hours or a couple of days until you hit the lows. You sit down, you talk, you work things out, and then you build back stronger, even higher. Life is good again. You go on some holidays until the next argument. Now, I'm sure a lot of you could come up with your own examples, but this is just to say that I see this pattern again and again everywhere you look. Now, back to investing. So what happens is when people start buying something of value, the price is shooting up, everybody starts jumping on board because the price is going up, pushing it into a bubble territory until enough people think this has gone up too fast, too quickly, begin selling, and then it repeats. People start selling, prices go down, everyone panics, which causes the sharp drops. We get some kind of capitulation until enough people think, do you know what, this has gone too far. This is a really bargain price. More people begin buying, which then brings the price back up. People see it going up, more people jump on, and then we get these cycles. So this is something to constantly remind ourselves that it happens again and again and again. Right, next up, we're going to zoom in on just one of these cycles. And you may have seen this before. It's the stages of a bubble or stages of a cycle. So we can see we have this early run up. We have this bear trap where people think it's over, but then everyone jumps in. Public goes crazy, push the prices right up. You get the first crash, which then hits the bull trap where everyone thinks it's going back. And interestingly, in crypto, we had this double top event. It did go a little bit higher where everyone's thinking returning to normal. Here we go, new paradigm, before it starts selling off. The fear kicks in, the uncertainty, the doubt. We get some kind of capitulation event. It goes too far. So here you can see they've drawn the mean here, as it is growing over time, but it sells off too far until people begin buying back in, and off we go again. And what everyone's trying to figure out is, what is the value right now? Is it overbought? Is it oversold? And by how much? And then just check out these correlations. Here is the 1929 stock market bubble overlaid on what we just saw, and just look how it correlates. It's actually scary close. Got the bull trap there, and then these big scary where it just keeps dipping, just keeps dipping, just keeps dipping below the mean. This was the 2000.com. Again, had the early run up. We had a couple of these bear traps, this big run into a hyper stage. Again, the first crash, it had again another bull trap before we have these big scary where it just dips and dips and dips. And it gets to a point where people say enough is enough. This went pretty deep into despair. And finally, this was the 2017 run in Bitcoin. Again, we have a couple of these bear traps here. We had this huge run up. We did have a big crash, but it was a bull trap as it came all the way down. But you can see us humans are very consistent as it happens again, again, and again. And so for the big opportunity, I just want to point out that it's in the deepest, biggest crashes that the best and biggest gains are made. So here is Bitcoin's price from inception, and you can see all the big runs and crashes that have happened. And if we go back and take a look at the 2011, 2012, what an epic run this was. And in the deepest crash, if you were able to buy around this biggest crash, this is how you got repaid over the next couple of years. Then the big crash 2014, again, it's in the deepest of the crashes where the best buying opportunities are made. And if you did over the next couple of years, this was the epic run that you got to experience. And then again, it's in the deepest, scariest capitulation crashes where the best opportunities are. And if you did manage to dollar cost average around here, again, this is how you got repaid. And historically, this crash doesn't seem so bad when you look at what's happened in the past. So let's zoom in now on the Great Financial Crisis. So this is the S&P 500, the big 2007, 2008 crash. So this is one of the biggest ones in the last 100 years. So you can see this crash happened over a couple of years. But here is the tried and tested strategy on how to navigate these crashes. I like to weight a certain percentage. It's going to be different for everyone, but maybe you start buying in after 20% down or 30% down. And then because it's virtually impossible to know when the actual bottom is going to happen, we dollar cost average. And for anyone new, dollar cost averaging is just basically buying in every single month. And what happens is if you buy, and then you buy here, and then you buy here, and then here and here, and you're basically buying the whole bottom as it happens. And then what happens for people with patience a couple of years down the line, when everything's right up here, instead of looking back and wishing you had bought more during the crash, you've basically averaged out the entire bottom. So I hope that makes sense. And now we'll take a look at where we're at right now. So this is the Bitcoin price live as I record, and anyone who's been watching my videos over the last couple of months, this is exactly how I drew what was going on. So I've not moved these lines at all. Now we had this bear flag which was painting out over the last couple of months, and 2 out of 3 times it was said that this will break to the downside, and then look at what happened. It exactly bounced off this 30,000 mark. Now, my next buy order was it needed to comfortably break below, as my money's kept in BlockFi in stable coins. And so by the time I'd woken up, even though it had just broken below 30, I did actually miss this before it bounced back off. But this is why I'm now paying more attention to technical analysis, because again, humans being humans, we do like round numbers, and this 30,000 was a huge level of support. And obviously people talking about the 20,000, which was the last peak here. But now let me show you why I think it may have further to come down. So this is the S&P 500, and I had explained before that it had been in a very consistent channel for many, many years before going into this big COVID crash here. This is when the Fed stepped in, printed loads of money, and put us in this crazy high channel going on here. So all it's doing is the market could not sustain this kind of crazy run, and it's coming back down to normal levels. Now the S&P is just maybe starting to enter where the natural long-term trend should be, and this is why I think there may be further to come down. And it's a great lesson on mindset. Now, if things just grew at a normal rate, everyone would be quite happy. But we were given this crazy run where crypto went up 300%, the S&P went up 30%. We were given something and then taken away. And now everyone's in fear, panic, and uncertainty. Where if we just had natural growth, we'd be at the same place, but feeling content. Which is why a lot of this stuff is just in our head. Right now is certainly a chaotic time in crypto, as fear, uncertainty, and doubt is close to its maximum. However, it's in times like these that we have to remind ourselves that the best opportunities are made in the deepest crashes. We saw that because of human nature, markets are cyclical and always going from overvalued to undervalued again and again. And as it's virtually impossible to time the bottom, a great strategy is to simply dollar cost average, and then you can capture the whole bottom. Now, if this is so simple and so obvious to do, then why don't most people do it? Well, as you're buying, it means you could be losing money straight away. So mentally, it's a very hard thing to do. And this just means that each buy, you'll need at least a 1-year time frame and a large cup of patience. And as the saying goes, fortune favors the brave. And it's my belief that there'll probably be a whole new bunch of millionaires who bought during this crypto crash, which we'll hear about a couple of years from today. Now, remember, none of this is investing advice. Investing in volatile assets does come with a lot of risk. This is just how I see it and what I'll be doing myself. So there you are, guys. Hope you enjoyed. Now, if Bitcoin breaks comfortably below this 30K mark, I will be deploying half my cash, and then my next target will be sub 25,000. That's my plan for what it's worth, and for now, just to say, if you did enjoy anything in the video, then drop a like, always appreciated. If you haven't yet subscribed, click below and join us. We've got some great videos coming up that you don't want to miss. Okay, cheers guys, thanks for watching, and I'll see you in the next video. Bye for now.